The TSX moving up today, but the American market's kind of stalled. Let's go to Carol Schleif, Chief Market Strategist at BMO Private Wealth, to talk about what's going on. Thanks for your time today.
Thanks for having me.
So markets paring back some of the gains we saw from Friday after the Jerome Powell speech. Why do you think that is?
Well, I think the markets rebounded pretty heavily last Friday in particular, and I think part of the reason for that optimism was the surprise, because everyone had expected Chairman Powell to stay pretty neutral and middle of the road, saying data dependent and all the usual things. So it took the market by surprise, if you will. And it's also really important to remember that we're in a month that's traditionally very low volume, so that you can have headlines push things around. I think this week, the fact that they're trying to absorb that, plus a lot of additional headlines coming out of the United States, and then waiting for NVIDIA earnings tomorrow and the PCE on Friday, because Chairman Powell did open the door for a rate cut. Investors here are going to want to see if there's going to be any follow-on to that, or if it'll be a one-and-done sort of rate cut.
Yeah, you've referred to Friday's U.S. PCE as must-watch. So what are you expecting? What are you watching for exactly?
Well, I think the thing is we'll want to make sure that it comes in about in line with expectations. Most of it should be pretty hard-baked, if you will, because a lot of the data comes in and you expect it to be a little stronger, not showing the deflationary aspects that we saw earlier in the year. But if anything really lends a curveball in that, I think then investors will look sharply at it. But the interesting thing here again is that it's reported on Friday. It's Friday before a long weekend, so you might, whatever sort of reaction, if there is a reaction, positive or negative on Friday, you'd probably see it resolved, if you will, next week when most everybody's back in town in force.
Do you think that if the numbers come in higher and they expect, and inflation is moving or trending up, and with the job numbers the way they are in the U.S. right now, how do you think Jerome Powell will balance that in September if the numbers on Friday come in a little higher than expected?
I would suspect that the September number, because of the fact that he stepped off that pretty neutral and basically teed up a September cut, I would suspect that that one still comes through, because one of the other things he alluded to, there was a lot to read out of that conversation on Friday. And one of the things he alluded to is the fact that, inflation can be volatile month to month, and they have many different policy tools they can use to get some of those short-term inflation things back in the genie back in that bottle, or at least attempt to. The employment market, on the other hand, tends to be very slow moving. It's backwards looking. And when it's showing the strain it is, and he used the phrase curious balance that it's in, where people aren't hiring, they're not laying off either, but it's just a very delicate, very curious balance. And so I think they're going to err more on that side of their policy, which is a philosophical shift from where the committee's been for the last year and a half.
Recent earnings, we've had retailers saying they will pass on some of the tariff costs that they may have been absorbing up to now. Any concerns about that, or in any other of the earnings news you've seen?
Well, I think there was lots of interesting things out of earnings. For example, if you take the Mag 7 out of it, which we don't have all 7 clearly reporting because we're waiting for NVIDIA tomorrow. But if you take the remainder out of that, the others turned in an aggregate average of 6.6% earnings growth, as opposed to their expectations were flat going into the quarter. So we had solid earnings across the board. Retailers more recently have talked about selectively needing to pass some of that on, but we don't think it'll be widespread, because retail and anyone who sells to consumers know how exhausted consumers are, not just about inflation, but about where the price levels are now relative to where they were pre-pandemic and in the pandemic. And so that exhaustion means that retailers are going to be really careful, and there's going to be a lot of discussions inside about, do we run the risk of sacrificing customers, or do we sacrifice margins and shareholders? So for those publicly held retailers, it's a really difficult decision. And for the small and mid-sized retailers, it's even tougher because they have less room to be able to absorb it.
So, Carol, you mentioned NVIDIA. As you mentioned, they report tomorrow. What are you looking for here? Do you think they'll exceed? Again, investors have very high expectations, as you know.
Yeah, it's going to be hard, and there's going to come a quarter, whether it's this one or future, next quarter or the quarter after that, there's going to come a quarter where they don't exceed. And even last quarter, they met to slightly beat, and Street was disappointed at first and then came back around. But the AI story is there's a lot of capital expenditures going on there, both in terms of people and in hardware and data center build and things like that. So you can only push that so far when you've got $3 and $4 trillion companies growing at double digit. And sooner or later, it is going to need to broaden out. And I think you've seen hints of that already, because even the market action on Friday and then following again this week, you saw the Russell 2000 elevate more than the other market indexes. And so you're seeing some of that broadening already, which is very healthy for the sustainability of the market averages across the board.
All right, I will leave it there with you. Carol Schleif is the Chief Market Strategist at BMO Private Wealth. Thanks for your time today.